For decades, the global economic map seemed permanently drawn, with the United States as its hub. But the tectonic plates of that order are now grinding against each other. A seismic shift is underway in the global economic landscape, redrawing the very lines of commerce and influence. It's honestly a quiet but powerful realignment, one that's happening right on America's doorstep. This is a revolution measured not in headlines but in shipping containers and currency fluctuations, unfolding in dense columns of trade data. Its impact, however, is as profound as any political upheaval. Nations that once looked to the United States as their primary trading partner are now turning their gaze northward. They're looking to Canada, not as a secondary option, but as a new anchor in a turbulent global economy, seeking a partner perceived as more stable, predictable, and diplomatically consistent. This isn't a slow generational drift, it's a rapid, deliberate pivot. Countries are actively rewriting their economic playbooks, rerouting supply chains that took decades to build. They are doing it with an urgency that suggests a fundamental loss of faith in the old model of American economic leadership. The scale of this pivot is staggering. A stunning 11 countries have redirected the bulk of their trade, choosing Ottawa over Washington. These aren't minor economies. They are significant players from Europe, Asia, and Latin America making a calculated decision to shift their primary economic allegiance. This move signals something profound about the changing nature of global influence and trust. It's a story about the erosion of economic gravity. The center of the Western economic universe, once fixed over the United States, is now demonstrating a new, powerful pole of attraction. It's a story about more than just dollars and cents. It's about the perception of stability and reliability in a fractured world. Countries are placing their bets on political consistency and a commitment to the rules-based international order, qualities they increasingly see embodied by Canada. The implications are immense. This shockwave raises urgent questions. Why is this happening now? What does it mean for American jobs and industries? And as the U.S. finds itself in economic competition with its closest ally, what does this mean for the future of the North American continent and the global order itself? Narrator, VO. On the surface, global trade is a story of massive ships and endless containers, but underneath it's a story of calculation and confidence. And for a growing number of international businesses, the calculations are changing. The most tangible evidence of this shift can be found at the gateways of commerce, our ports. A spokesperson for one of Canada's largest port authorities recently put it plainly. Narrator, VO. He noted, "Our logistics partners are increasingly creating pathways that leverage the stability of CETA and the Canadian rail system to bypass potential bottlenecks and tariff uncertainties at U.S. ports." Narrator, VO. Let's unpack that. It's not just about avoiding a traffic jam of ships off the coast of California, it's about avoiding a traffic jam of unpredictable policy. It's about routing multi-million-dollar shipments through a system where the rules of today are overwhelmingly likely to be the rules of tomorrow. This isn't just a preference, it's becoming a core strategy. A leading logistics analyst explains the math. A company might face a 5% chance of a sudden 25% tariff if their goods land in a U.S. port. That risk, however small, can wipe out an entire year's profit margin. The Canadian route might be marginally longer or more expensive on paper, but it's predictable. In today's world, predictability isn't just a feature, it's the most valuable commodity in the supply chain. Narrator, VO. This is a practical, business-driven decision. It's about finding the path of least resistance and greatest certainty, and that path increasingly runs through Canada. Certainty isn't just about avoiding tariffs. It's about a consistent regulatory environment, a trusted legal system, and a political culture where long-term agreements are honored, regardless of who is in power. Narrator, VO. Expert opinion overwhelmingly supports this analysis. Dr. Janice Stein, a renowned political scientist at the University of Toronto, has given this phenomenon a name. She calls it a quiet decoupling. Narrator, VO. It's quiet because it's not happening in fiery speeches or dramatic treaty withdrawals. It's happening in thousands of boardrooms, in revised investment plans, and in the fine print of supply chain contracts. It's a slow, deliberate, and powerful rerouting of the world's economic plumbing.
She argues, allies are not abandoning the United States, but they are building redundancies. They are creating a Plan B. Canada has skillfully positioned itself as the world's Plan B for North America. For decades, the fundamental assumption of global business was that the United States was the stable, predictable center of the system. That assumption is now broken. And when a foundational assumption breaks, every calculation that was built upon it must be reevaluated. That's what we're seeing now. It's a tectonic shift happening in slow motion.
Narrator Vo. Her point is crucial. This isn't about animosity towards America, but about prudent risk management. Geopolitical risk analysis used to be for oil companies in the Middle East. Now, it's for a South Korean battery maker deciding where to invest billions of dollars. Narrator VO. Consider the automotive sector in South Korea. Giants like Hyundai and Kia are pouring billions into electric vehicle battery production in Canada. This isn't a random choice. It's the result of a strategic calculus, where Canada presents a near-perfect solution. It's a pit-to-plug ecosystem. Canada has the critical minerals like lithium and cobalt, the clean hydroelectric power to process them, the skilled workforce to build the batteries, and the trade agreements to sell the final product globally. Narrator, VO. An executive for one of their key suppliers explained the move.
He stated, "Canada offers us green energy for production, critical mineral inputs directly from the source, and stable trade access to both the US and European markets. When we present our 10-year investment plan to our board, we have to model for risk. In the US, the model includes potential 180-degree turns on environmental policy and trade agreements being used as political leverage. In Canada, the model is simpler. The government is a partner, not a source of uncertainty. For a multi-billion-dollar investment with a 20-year lifespan, simplicity and stability are everything."
Narrator, VO. This hedging strategy is even happening within America's own trade bloc. Even Mexico, America's partner in the USMCA, is hedging. Narrator, VO. Mexican agricultural exporters who have faced the recurring threat of sudden seasonal tariffs from the US have been aggressively seeking to expand their market share in Canada. For a farmer planting an avocado tree that won't bear fruit for years, that kind of political uncertainty is devastating.
The head of a major growers association was quoted as saying, "We love our American customers, but we cannot build our business on a foundation that shifts every election cycle. One tweet, one new policy, and our access to our largest market could be jeopardized." When we talk to our Canadian partners, we talk about logistics, quality, and volume. When we talk to some of our US partners, the conversation inevitably turns to politics. We are farmers, not political analysts. Our partnership with Canadian importers is based on long-term contracts and mutual trust, which allows us to invest and grow.
Narrator, Vo. And this trend isn't confined to North America. Look at Germany's famed Mittelstand, the medium-sized, family-owned manufacturing champions that form the backbone of its economy. For generations, success meant cracking the American market, but the ground has shifted. The CEO of a firm specializing in advanced medical components told us, "For years, our North American strategy was simple. Build in Germany, sell in the USA. But now, it's a minefield of Buy American provisions and regulatory whiplash." We needed a North American production base, but the risk profile in the US was too high for our board, so we chose Canada. In Ontario, we found a highly educated workforce, a welcoming investment climate, and crucially, political and legal stability. From there, we can serve the entire North American market, including the US, but from a stable, predictable home base. It's the smart conservative choice. It's our insurance policy. Narrator VO. An insurance policy, a plan B, a quiet decoupling. The language varies, but the strategy is the same. In a world of growing uncertainty, America's closest allies are building pathways around it. And many of those pathways lead directly through Canada.